Hey traders, welcome to Charts and Coffee. Great to see everybody. Happy Monday. We're going to take a look at what's going on with the market together here. Taking a peek at what's going on this morning with the S&P, NASDAQ, Dow, bonds. We'll take a look at notes and euro as well. And as always, if you have any questions, feel free to type them on in. All right, so let's see here. Bear with me. All right, so we're taking a look at what's going on with the ES to kick things off. I've got my brain a little bit on Google here because we do have a long position going into the morning and a handful of tech stocks, something I haven't done a whole heck of a lot with while tech was struggling, but there are some relative outperformers that have emerged. Let's get our daily price movement ranges up on the screen. By the way, those of you that subscribe to DPMRs, heads up, we've got a fresh batch of volatility ranges for you all to deal with the current volatility that we're seeing a whole lot more normalized ranges in. So super happy about that. Excited that as the VIX continues to drop. By the way, if you checked out our Sunday top tier outlook, preparing for the week, you know where our focus is. And that focus is, are we going to continue to see normalized volatility? And by that, I mean not pushing past first and second standard deviations in what we historically see. And that's going to lead to far more accurate stop loss placement. That's going to lead to far more accurate entries without seeing the unrealized heat. So super excited about that. Notice the S&P trading above the previous session close. That line in the sand is one of a handful that we want to take a look at each and every morning. What kind of mood is the market in, just to kick things off? It doesn't mean we're going to stay above it. It doesn't mean that it's doing anything other than right now before the bell, 28 minutes or 26 minutes before the bell, we are seeing price action in what we would loosely consider to be the bullish hemisphere. So that's excellent news for follow through for those of you that were long into the weekend like myself and the folks in the Sector Secrets Mastery. Dow, wow, Dow is borderline above the high of the previous session. So that's a good amount of strength there in the Dow. And then we'll take a look at the Russell here. Also, all four indices, gang, all above that previous session close. Now, what we would love to see from a macroeconomic standpoint are things like the bond market also moving higher, which it is above the previous session close. So there's notes, and here's the 30-year. Also, this tells us that what? Yields are, in fact, starting to drop. And a lot of that has to do with the fact that the July, I'm not expecting rate cuts in July, by the way, but that does tell us that the rate cuts in July are at least on the table, which actually helps September, where if we're going to start to see rate cuts, as we right now know, possibly the soonest, it'll be in September. But again, it's not a matter of when we get them at this point. We know they're coming. We just don't know how many and when that actually begins. And those are things that will help the equity markets move higher, because remember that macroeconomic certainty about a cutting cycle was a lot of the fuel for the rally that started arguably mid-October of last year. All right, that being said, let's go ahead and take a look at the euro. By the way, for those of you that ask me, Rob, do you still look at currencies? Look, whether I look at currencies through the currency ETF, whether I look at currencies through the futures, or yes, whether I look at currencies through the Forex market, they're still on the radar, because the currency can in many ways be considered the stock of the country. And that gives us a lot of insight into macroeconomic policy. Are those central banks holding in terms of rates? Are they preparing to cut? Remember, any central bank, including the US, when we have rate cuts coming, that should weaken the currency. So one of the things we want to see if we're waiting for the FOMC to cut rates is dollar weakness. The best way to understand what the US dollar is doing is to not look at the dollar index futures or even the DXY or even the UUP, because that is actually a basket of currencies versus the US dollar. The purest look at the dollar would be to look at its negative or inverse relationship to the euro. So if the euro's moving higher, dollars moving lower. So everything does seem to be in line for the environment that was really great for the span between about November to the end of March. And if we can now, as we're embarking on the beginning of May, if we can start to see those alignments that are reflecting a certainty again about rate cuts from the Federal Reserve, this should give us really good follow through. And that's something that really was lacking in April. So things are starting to look, again, normal. They don't have to be bullish. They don't have to be bearish, but they need follow through, right? And we don't have trends in a lot of these places yet because of what April, the chaos that April left behind, but follow through would be a great first step. So that's where we are right now. As I mentioned earlier in the Sector Secrets Mastery, just to give you a glimpse of what we were doing, we tried to get into 3 swing trades, overnight exposure. That's all I mean when I say swing. You know, I'd like to see follow through from session to session. Therefore, I'm willing to take the trades overnight. And what we have in as far as open trades, we tried to get a piece of Schwab, which I will continue to pursue. We ended up getting long Qualcomm. Heads up, Sector Secrets Mastery folks, we might be at the break even at least, optional scale out on our Qualcomm, so we can ring the cash register this morning. Already did on Google. If Google can continue higher, we'll look for more opportunities to scale out, pay ourselves as we're looking at the uptrend in Google continuing. So we'll see what happens there. So if we're going to be able to get into, so Philip asks, will there be another? Oh gosh, Philip, I don't know. We're still managing, right? The open one that we triggered, just to give everyone a little background on what Philip is asking about. On Friday, the plan was to buy the May 17 160s or 162.5. Now you can see here, either one is rather deep in the money right now. So Philip, we would need a brand new setup. Whether we get there is going to hinge on the strength in XLC, the sector that Google belongs to. Of course, Google's movement itself, which is a relative outperformer in the XLC, and the NASDAQ. The NASDAQ follow through will be a part of that as far as the current trade we have open. But in order to get in again, we need a scenario like we had last week, where Google traded down to support levels that we could buy those calls off of. So don't know, but obviously we'll keep an eye out for Google's maybe another setup in Google. Don't know, Philip, but also we'll look for other, if it's not Google, what else could it be? Anything that might be pulling back into daily price movement ranges, whether that be from a day trading perspective on the 5-minute chart, whether that be from a 1-hour time frame perspective for a shorter term swing, or whether that be our longer term swing time frame, the daily. So it doesn't have to be Google. We'll see what else is setting up. And if you want to check out what we're doing in the Sector Secrets Mastery, trades like this, how are we managing volatility, how are we measuring volatility, come check it out at sectorsecrets.com. All right. Dave asks, what is my read on mid cap versus large cap and small cap? Dave, I have no read on that. What I do though, so I don't start off the week saying mids might have a better week than not. I try to start off my week with what are the catalysts that could cause any one of those groups to move? What are the high concentration weighted names? What are the sectors doing? What are those indices doing? Obviously, if we're going to talk about small, I'll take a look at the Russell. I'll take a look at regional banks. But I'm just going to see what sets up. What's my read? Right now, everything's bullish. And that's the only read that I'll take. Very broad strokes until we start to see a little bit more action after about 9:40 to 10 a.m. And then we'll see what we're left with. Is there going to be a lot of profit taking on the bell? I mean, the Russell's already, you can see here, pulling back quite a bit pre-market. And maybe that gives us an opportunity to take advantage of a move. I don't know as of yet, but I'll tell you this. I try not to have a lot of preconceived notions about what the market's going to do, because we'll only limit my opportunities by sort of covering everything that I see with a bias, right? So the only directional bias that I want are the directional biases of, which markets are in trends, which markets are breaking previous downtrends, or if they were bearish chop, which ones are going into neutral chop. And that's what I'll do. So as price action reveals its intentions, then I'll start making a plan. So I try not to do that, Dave. I try not to do that. However, I have been a little bit more interested in the S&P for a couple of reasons. One, I want to try to take advantage of XLF. Two, I want to take advantage of what seems to be strength again in tech, thinking Apple, thinking Microsoft, XLK names, because XLK is quite heavily weighted in the S&P. So I'm a little bit more interested in the S&P right now. And then I want to, if follow through is more likely, and let's take a look at that VIX for a moment. When follow through is more likely, it does mean then that the VIX is dropping ideally below not just 15, but in the 14 to 13 area. In fact, the sweet spot for the VIX, and this is the VIX futures, by the way, the sweet spot for the VIX is going to be something more along the lines of not 16, more below 15, but above 12. So 13 to 15 on the VIX is going to be very good for us in terms of, again, follow through. Notice I'm not saying direction. Notice I'm not considering it the fear gauge. To me, VIX is much more applicable as a certainty gauge. And certainty is why traders will trade things in a certain direction, why we'll have follow through. And being above 16 obviously was not great for follow through, but neither will frankly being much below 13. So that 13 to 15 sweet spot for everything will be ideal. All right, next question is, when I take a look at COIFIN, sure, let's jump on over there. When I take a look at COIFIN, let's jump onto our sector view. All right. Oh, I need to log in, don't I? Hang on. There we go. When we're taking a look at the sector view for, there we go, for the indices, you notice I have quite a few checked. And the reason I check the ones that I check that are a little bit extra has to do with defensive sectors, things like XLP and XLU, which are not heavily weighted in the broader averages. Broader averages don't have a lot of exposure to staples or utilities, which is why they're such great places for defensives. If traders don't want exposure to chop or weakness or whatnot in the broader averages, the best place to look is then what's happening in defensives. And XLP and XLU, you'll see, are added here. A couple extra things that I've added are things like oil services and oil and gas explorers. While those are a little bit more Dow and S&P weighted, with crude oil moving and those sectors largely pretty strong, I'll look at those as well. So that's why I have the names listed here. Don't forget metals and mining, gold miners as well are on the move. So again, those will be added to this relative performance comparison. So when I look at the 1 month comparison chart and then see the 1 minute, I'm not looking at a 1 minute, Java. Yeah, I'm not looking at a 1 minute. When we're looking at this, the shortest I can go to is a 1D, which is a daily. And this is really going to lend itself a little bit better to relative performance for today, for now. If I'm looking at trends for overnight swings, it's not the 1D I'll look at. That's not necessarily reflective of where the trends have been. That's where looking back on a 1 month will be helpful. Don't do a month to date quite yet. There's only 6 days. We're only 6 days into May, but I'll look at the 1 month, right? So if you're talking about the 1M, that's actually 1 month. So no, I will not use, first of all, I don't trade a 1 minute. And if I want to know, to your point, which I think is what you're asking, Java, when I'm looking at what could happen today, I'll look at the 1 day normalized performance. All right. So that's where I'll focus on, hey, if there is follow through somewhere, which sectors are at the top of the list? If there's follow through to the downside, which sectors are at the bottom of the list? That's the way that I'll process that. Yeah. So 1 day versus 1 month. Exactly. Right. 1 day versus 1 month. No worries. No, I figured that's what you meant. So for day trading, the 1 day would be great. For swing trading, I'd use the 1 month. All right. Okay. Back on over to the charts. Taking a look at, bear with me here. All right. Taking a look at the VIX, which we already did. where else could we see strength? Well, I mentioned I've got Google. So obviously the NASDAQ is on my radar, but XLC is where Google is weighted, right? So Google's going to relate back to XLC. I mentioned Qualcomm earlier. Now, where's Qualcomm going to track back to? Yeah, Qualcomm's going to track back to, yeah, Eddie, SMH. Now, do I need SMH to move higher for Qualcomm to move higher? It sure wouldn't hurt, right? So as we're up at 219, this is going to be what is mostly likely reflected in NVIDIA. It's 20+% of the SMH, the semiconductors. So Google up at 889 sure isn't going to hurt. Taiwan Semi, TSM, trading higher sure won't hurt. So what we want to see is sort of a rising tide effect in our sectors to help the individual stocks within them. So SMH is looking great. SMH, by the way, is one of the few sector ETFs that actually has really good liquidity if we want to trade the options, because a lot of times, we might like a stock chart or an ETF chart, but when we take that idea over to the option chain and we look at the open interest at the strikes that we want to buy, if those are not liquid, I need to pass. So I'm always looking for liquidity as well. And just as a quick reminder for my mastery folks, I know a lot of you are logged in for Charts and Coffee, which is awesome. Remember, we have the 177 and a halves for May 17th. We have plenty of time to expiration. We've built the position, right? We're trading at 180 and 3/4 right now. Yeah. We built the position either at 178.50 or 178.05. I don't believe we hit our conservative trigger at 177.42. We have our initial scale out, the non-negotiable. We must pay ourselves scale out waiting at 182.30. However, we can, and we're knocking on the door. Actually, we're 30 cents above it. We're at the break-even level right now. So for those of you that are saying, Rog, I paid XYZ for Qualcomm, and what is it that I want to do now? My average cost on Qualcomm was $4. So when we open up, I'll look to see if I made at least 25%. We were flirting with that on Friday. We were so close to maybe taking that 25% or $1, right? Let's talk in dollars. But if I'm risking 25% risk, 25% reward gives me a 1-to-1 risk reward ratio. Like I said, our targets are going to be based on price levels on the chart. And there is an optional that's kicking in. And I would say for those of you that want to have an optional scale out or at least move to break even, we should be able to do that. We'll see where we are in 11 minutes, but queue up Qualcomm on your charts, and we'll take a look right at the bell if there is an opportunity to scale out. And that, Eddie, is very much the way I'm looking at SMH. Do I have skin in the game? Indirectly, right? With a stock that's a top 11 name in the SMH. Our material still bullish in my opinion. Well, so let's go take a look at XLB. Now, XLB, interestingly enough, has weighting in a lot of names, and one of them is Freeport-McMoRan. So Freeport-McMoRan is something we've been in and out of a lot. We've been wanting to get a piece of this again. Freeport-McMoRan is a better look at basic materials. It's a better look at metals and mining. And no, XLB in and of itself, Kristen B, no, it's not bullish to me. And let me show you why. This is always going to be coming back to what my charts are showing me. And if my charts are showing me right now that I have still red candles, which you can see are still the dominant color of the candles, we're just now trying to shake off a very brief period in a downtrend. So it's not ready for prime time yet. It would arguably be bearish, where in this area, if we get strength in XLB, maybe there's something to do. But remember, XLB liquidity can be very, very thin. So it would not be an XLB name. It would have to be something within the XLB that is also trading lower. We want to find something weak, preferably an even better downtrend. It could be things like Sherwin-Williams. It could be things like Nucor, even PPG, the paint company. So look for those downtrends in XLB to find stocks that have liquidity. XLB on the put side, I don't believe is really going to have a whole heck of a lot for us. FSLR, hey there, Fernando. What do we have in FSLR? FSLR is going to be opening up at 194. The trend has been bullish on the intraday charts, as you can see on Friday. I don't have anything on FSLR for a 1 hour, although a mean reversion buy would be great. I would stick to the long side, and you might say, okay, Rog, why would you? I'm not going to buy on the open. Please remember, bullish is not the same as buying, right? So if I have green candles, green candles, green candles, I am going to look for a buying opportunity. I don't know what that's going to look like, Fernando, but I will look at it from the long side to your question. Thank you for that. The other thing to keep in mind is, we do have earnings in our rear view mirror, and this might be a little bit of post earnings reaction still playing out. It's been obviously very bullish for FSLR, and ultimately what I want to do is just wait for a pullback. Could be a 1 hour, could be a daily, or I could day trade it on the 5. All right, what do we see in American Express? It's not one of the stronger names in financials, right? It's not one of the stronger names in financials, so it's not really high on my list. But in terms of those symbols that I would be open to buying, it would be on that list, Alex. So I don't have a trend, but it's dominated by a green candle. Same thing with Goldman, same thing with Citi, same thing with Schwab, same thing with Wells, right? Those would be most of where my interest is. But please remember, financials themselves are still pretty weak. So ES strength, YM strength is going to help carry this sector higher. And if this sector can move higher, obviously I want to look at those sectors or those stocks within this sector that are also best poised to keep the continuation going to the upside. And that's where I would focus. Schwab is the best looking one, but anything with mostly green candles, green momentum would be great. So you might say, Rog, what about Bank of America? See the yellow in there? Even though it does have the green momentum, the yellow candles would put that a little bit lower on the list. Same thing with Morgan. So the more I see the dominant green candles, that's exactly what I would look at. All right. I've run over, so it's 9:22, says Twitchy. Yep. Just wanted to make sure I get the questions in. Thanks as always, gang. My Sector Secrets Mastery, folks. I'll see you in just a moment.